In this video, we're going to talk about the difference between Roth and pre-tax savings into your 401k account. And we're going to start by building a scenario. Elizabeth is 31 years old and just started her job as an event coordinator at a company called Roth, or Revolution in Tandem Events. Elizabeth is excited about the opportunity to save through Roth's 401k plan because she knows it gives her the best opportunity to start saving for her future. Elizabeth starts out by electing to save 10% of her salary on a pre-tax basis into her 401k account. The beauty of her 401k pre-tax savings is that every dollar she contributes to her 401k plan actually reduces her taxable income. Here's how it works. After Elizabeth's first 2 weeks of work, her total pay before taxes was $1,500. Because Elizabeth elected to save 10% on a pre-tax basis, $150 was automatically routed to her 401k account before taxes were taken out. So, after her 401k savings, Elizabeth had $1,350 left over, and that's the amount that she's then taxed on. We're making an assumption that her total tax rate is roughly 30%, so $405 in taxes will be taken out instead of $450, which is what it would have been if she didn't save money into her 401k. That's a $45 reduction in taxes today. Because her 401k account is tax deferred, Elizabeth will not have to pay taxes year in and year out, as the account hopefully grows over time with dividends and interest. However, when Elizabeth reaches retirement and decides to use her savings, she will be taxed at that time on whatever she decides to pull out of the account. So, she's getting a big tax benefit today, and her taxes will be deferred throughout the life of the account. Now, had Elizabeth elected to save 10% into her 401k through the Roth option instead of the pre-tax, she would receive a similar benefit, but it'd look a little different. Kind of an upside-down version of the pre-tax benefit. Today, even though she made a 10% contribution of $150 into her 401k account, she would be taxed on the entire gross paycheck of $1,500 instead of $1,350 like in the pre-tax scenario. Since her total tax rate is 30%, $450 in taxes will be taken out today instead of $405 like in the pre-tax scenario. The $150 in savings that goes into her 401k account will hopefully grow over the next 30 years, and when Elizabeth uses her Roth 401k money in retirement, she will not have to pay a dime in taxes, no matter how much the account grows or how much she decides to pull out of the account. So, she's paying the taxes today and saving the tax benefit for her retirement years. Whether Elizabeth saves using the pre-tax or Roth version of her 401k plan, she receives a welcomed tax break. If your employer offers a pre-tax and Roth option for your 401k plan, consult your tax advisor or accountant to determine what is more appropriate. The benefits will vary from person to person. To talk to somebody about your 401k, email or call us at Human Investing.